Are you in your 30s and looking for some of the best investments? Want to own shares in world-class businesses that offer excellent potential for long-term returns? Would you like to also collect safe, growing, market-beating dividends? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. I started buying stocks at 27 years old. By living below my means and systematically investing my savings into high-quality dividend growth stocks, I was able to become financially independent and retire at only 33 years old. The dividend growth investing strategy can work miracles, but you have to consider your age when selecting the most appropriate stocks for your goals. If you're in your 20s, you're going to be much more interested in growth than yield. But if you're in your 60s, yield becomes very important because you're probably going to be living off of your investment income. What if you're in your 30s, like me? Well, in that case, I think it's very important to find a balance between yield and growth. And you still want to make sure you're sticking to high quality stocks. That means great fundamentals, including growth, financial position, and profitability. Quality is often borne out in lengthy track records of growing dividends. After all, how better to prove you run a highly profitable company than to send your shareholders growing dividends year in and year out? It's with this in mind, I want to share with you 3 high-quality dividend growth stocks that I think are great ideas for investors in their 30s. Each stock offers a market-beating dividend, great fundamentals, many years of dividend growth, and a valuation that isn't overly demanding right now. These are household names that should continue to compound your wealth and your passive income for decades to come. And they all provide very solid dividends that you could even live off of today if you wanted to. Want to know which 3 stocks I'm talking about? Let's dig in. The first stock I want to tell you about is Johnson & Johnson, stock ticker JNJ. Johnson & Johnson is arguably the bluest of all blue chip stocks. This is one of my favorite dividend growth stocks. It's a healthcare machine with businesses ranging from pharmaceuticals to medical devices to consumer products. Since we all know that quality healthcare products and services mint money, Johnson & Johnson should continue to do very well for many, many more years. This company sweats quality from its pores. It's one of only 2 companies in the world with a AAA rated balance sheet. The financial position doesn't get any stronger than that. Want more evidence of quality? How about 58 consecutive years of dividend increases? This dividend aristocrat has one of the longest dividend growth streaks in the world with a 10-year dividend growth rate of 6.6%. They can afford to hand out these increases because they're growing the underlying business. Free cash flow has almost doubled over the last decade. That keeps the stock's market-beating 2.5% yield about as safe as it gets. And the valuation isn't overly demanding right now. The price-to-earnings ratio of near 30 looks high, but that's only because COVID-19 has whacked earnings from almost every business out there. The price-to-cash flow ratio of 18.3 is only modestly higher than the stock's own 3-year average of 16.9, and the current yield is roughly in line with its 5-year average of 2.6%. Johnson & Johnson is actually one of my top 5 stocks for 2021. The second stock that I think is a great buy idea for investors in their 30s is PepsiCo Inc., stock ticker PEP. This is a household name with 23 different billion-dollar food brands. Think brands like Pepsi and Doritos. Will people be drinking and eating these billion-dollar foods tomorrow, 10 years from now, and 20 years from now? Almost certainly. And it's this level of certainty that makes this a great long-term investment. That certainty bleeds down to the dividend, which has been increased for 48 consecutive years. Another dividend aristocrat, Pepsi's been able to increase its dividend for decades on end because it's been able to grow its revenue and profit for decades on end. Now, it won't knock you dead with the growth with a 10-year dividend growth rate of 7.8%. But it's the kind of steady Eddie stock that can be a linchpin for a diversified portfolio of high-quality dividend growth stocks. And its market-beating yield, which is 2.9%, is potentially enough to live off of if you had a goal, like me, to retire in your early 30s. This stock gives you a nice balance between yield and growth, which is perfect for your 30s. The stock is also not terribly expensive here. Most basic valuation metrics are right in line with their respective recent historical averages. The price to cash flow ratio, for example, is 18.7. That's not far off of its 3-year average of 18.5. Paying a fair price for this level of quality in an otherwise expensive market doesn't strike me as a bad idea. Last but not least, let's talk about Lockheed Martin Corporation, stock ticker LMT. Lockheed Martin might just have one of the best combinations of yield and growth you'll find anywhere. This world-class defense contractor offers investors a market-beating yield of 2.7%. That's attractive in and of itself, but it gets better. The 10-year dividend growth rate is 14%. The dividend, which has increased for 18 consecutive years, is growing briskly. Human conflict has been around since, well, humans, except now we're fighting with very expensive machinery, which is where Lockheed Martin steps in and profits. With Lockheed Martin scooping up multi-billion-dollar contracts left and right, the company's dividend is set to continue flowing and growing. If you want quality, it's here. A fantastic balance sheet? Check. Net margin that's been expanding and now in the double digits? Check. Earnings per share that has tripled over the last decade? Check. There's almost nothing to dislike about this stock. That's also true about the valuation. The stock's price-to-earnings ratio of below 16 is well below the broader market and really belies the quality of this business. The stock's price-to-cash flow ratio has averaged 19.2 over the last 3 years. It's currently at 13.3. This discount is indefensible. I see this as a fantastic long-term dividend growth stock idea, especially if you're in your 30s. It's also one of my top 5 stocks for 2021. If you're not in your 30s, no worries. We recently shot a video for investors in their 20s, and we'll have videos coming up that'll cover investors in their 40s, 50s, and even 60s. I think all 3 of these stocks should make for excellent long-term investments regardless of your age. They should all produce outstanding returns, including a market-beating level of aggregate dividend income, but they could be particularly advantageous for investors in their 30s due to the balance between yield and growth. These dividend growth stocks are in what I call the sweet spot. That is, a yield of between 2.5 and 3.5%, paired with the dividend growing at a mid-single digit rate or better. You get plenty of both yield and growth here without sacrificing too much of either. It's the best of both worlds. As a financially independent investor in my 30s, I have to consider my income needs today, but also balance that against the growth needs of tomorrow, all in a way that maximizes quality and safety. These sweet spot stocks do exactly that. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these 3 stocks. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including a link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.